Good afternoon, everyone. On behalf of B&K Securities, welcome you all to 4Q FY18 post-result conference call of TVS Motor Company Limited. We are delighted to have with us today Mr. K. N. Radhakrishnan, Chief Executive Officer, and Mr. K. Gopal Desikan, Group CFO. I would now transfer the call to Mr. K. N. Radhakrishnan for the opening remarks to be followed by Q&A. Over to you, sir.
Good afternoon, everyone, for joining this call. Q4 our results, the two-wheeler sales during this quarter grew by 30.4%. Scooters grew by 25.5%. Motorcycles grew by 61.1%. Mopeds grew by 5.4%. Overall, domestic two-wheelers during this quarter grew by 28.6% over last year. Exports grew by 40.4%. Three-wheeler sales during the quarter grew by 90.7%. Revenue excluding the excise duty grew by 40.4%, 2,844 crores to 3,993 crores. We had cost increases in Q4, substantial increase in the raw material cost and the import duty of components put together almost 1.2%. And also both Tamil Nadu and Karnataka government increased the minimum wage by almost 30%. There was impact of almost 0.3%. Our product launches came in Q4. There was an additional, this is Apache 310RR, Apache 160 4-wheel and Ntorq 125. There was an additional expenditure in the marketing, including Auto Expo for 0.5%. We took a price increase in the month of January, about 0.4%. However, this was passed on to support the dealer margin improvement of almost 0.4%. Overall, despite all these cost increases, the Q4 PBT increased from 134 crores to 192 crores, 43.3% increase. Profit after tax for the quarter was at 165.6 crores compared to 126.8 crores last year, growth of almost 30.6%. Year as a whole, and this quarter, the EBITDA for this quarter is at 7%. Year as a whole, two-wheeler sales grew by 17.8%. Scooters grew by 30.4%, motorcycles grew by 25.8%, mopeds declined by 3.7%. Domestic two-wheeler sales during the year grew by 15.5%, exports grew by 33.7%, three-wheeler grew by 42.5%, revenue excluding excise duty grew by 24.7% from 12,135 crores to 15,130 crores. PBT for the year was at 878.6 crores compared to 698.7 crores last year, growth of 25.8%. PAT for the year is 662.6 crores compared to 558.1 crore last year, growth of 18.7%. The tax rate for the year is 24.6 compared to last year 20.1, primarily due to the reduction in the weighted deduction for R&D expenditure 200% to 150. And completion of the tax incentive in HP. Operating EBITDA for the year is 7.5% compared to 7% of last year. Dividend, initial November 17, first interim dividend of 2 per share. Then in February 2018, second interim dividend of 1.3 per share, put together 3.3. Products launched. The 125cc TVS Ntorq, Apache portfolio was strengthened with 160 4-wheel and also the current Apache RTR 200 4-wheel with the anti-reserve torque slipper clutch. Both are accepted very well in the market. TVS Motor Company was ranked number 1 in JD Power 2018 in both IQF and appeal score for the 4th time in succession. We were also ranked number 1 in the JD Power 2018 Customer Service Index, 3rd year in succession. RR 310 Apache won 2 prestigious awards this year, Autocar Awards 2018, Bike of the Year and Reader's Choice Bike. Company also won the Bike Manufacturer of the Year Award at Times Auto Awards 2018. 2018-19 monsoon is expected to be normal. Industry is likely to grow. With the strong portfolio and expected launch of new products in this year, we will continue to grow ahead of the industry. There will be upward bias in the material cost in the first half of this year. We are constantly reviewing this position. Already we have taken up prices and 0.5% will mitigate that of the cost increases. Further, we are focused on reducing the impact of cost increases through various cost reduction initiatives such as VAVE, platform harmonization, localization. We will be having improved product mix and that will also help us. The strong portfolio, the company expects to substantially mitigate the cost increases, and with the successful completion of various cost reduction projects, we will report improved EBITDA performance in 2018-19. Exports continue to do well, and we will continue to grow ahead of the industry. Thank you.
So maybe start taking questions now.
Yeah.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kapil Singh from Nomura. Please go ahead.
Hi, sir. Thanks for the opportunity. Regarding the margins, one thing I wanted to check in terms of, when we had last had the call, you were talking about achieving double-digit margins by Q4. So where is the gap compared to your expectations which has resulted in the miss this quarter?
The headwinds related to the raw material and the import duty increase and also the minimum wages increase with respect to both Karnataka and Tamil Nadu, these were not expected, this kind of increase. Okay. Of course, the three launches came together along with Auto Expo in the last quarter.
Yeah.
And because of the GST changeover, we have to support our dealers. That's why even though we increased margins, we have to pass it on to dealers to support them. And this was the quarter we have also seen a lot of tactical and intensive competition by reducing prices from competition.
Okay.
So put together, we saw a challenge in terms of the headwinds in terms of cost. However, we are confident that we will be able to, we have already taken up prices this year. And the product mix is better, and a lot of cost reduction initiatives, including VAVE and localization, is going on this year. So that will definitely help us to mitigate some of this headwinds.
Okay. So going ahead, are we expecting, any guidance you have on margins? Should we expect them to go up significantly from here, or you would look to maintain them around these levels, given the cost challenges we talked about?
We will definitely improve our EBITDA. I think our continued focus will be on growing faster and also to gain momentum in EBITDA. That focus will definitely continue.
Okay. And the second question I had on the volumes, if you could share your outlook for the various segments, particularly scooters, we have seen some level of slowdown. For example, if I see the April volumes, the traditional portfolio, excluding the new launch, hasn't really seen any growth. So any thoughts you would like to share? Is the scooter portfolio in particular slowing down for the industry as a whole or yourself?
For us, I think we had a reduced dispatch of about 10,000 numbers in April because of the transition impact of the e-way bill implementation. but that will definitely get compensated in May. And with respect to the overall growth, the momentum will be faster for us. Industry will grow in this quarter. That is our estimate.
For the year as a whole, like what kind of growth are you looking at for various segments? If you could share that.
Which segment?
For all the segments which we are...
Industry 8 to 10% is what we are forecasting.
Okay, sir. Thanks. I'll follow up in the queue.
Yeah.
Thank you. The next question is from the line of Binay Singh from Morgan Stanley. Please go ahead.
Hi, team. Thanks for the opportunity. So just to be clear, are we giving any timeline now for a double-digit margin? Because earlier there was a sort of a timeline shared for that. By when do you target to achieve that now?
I think the direction is more important. We will continue to focus on that.
Right. So no fixed timeline now, right? So that's a departure from past.
I think the more focus is definitely on improving the EBITDA performance in addition to growing faster than the industry.
Okay. So second question is that in the comments you mentioned three things if you could elaborate on. You said that incrementally also you are seeing some cost pressures which will come through in the coming quarters. So could you share as to how much of raw material headwind is behind us? What sort of price hikes you've taken? So in a way, like directionally from here on, something on that. And secondly, you talked about dealer margin increasing. So was that in line with everybody else in the industry? Because TVS, is seeing such a strong sales momentum, so one would imagine that the dealers' profitability should be much stronger. So to an extent, dealers should be able to absorb a lot of costs. So any comments on that?
See, we review one is on the cost side. Definitely, we have seen a substantial increase of the raw material in Q4. I don't want to comment about our competitors, but for us, based on the agreement what we have with our suppliers, one significant increase has happened in Q4. Also, some import duty increase, whatever we have seen. Put together, there was an impact of almost 1.2%. And with respect to dealer margin increase, this was our initiative to support because post GST there have been some challenges. So whatever price increase we did it in January, we helped the dealers to improve their profitability. That is the 0.4%. And this quarter, we have already taken another price increase, which amounts to almost 0.5%.
So to an extent, have you sort of offsetted all the commodity headwinds that you're incrementally seeing, or do you think that they'll further hit you?
This quarter also, we are seeing some more increase in the raw material cost. Our estimate is up to H1.
Expected to be like this till H1.
Yeah.
Okay. Great. Thanks. I'll come back in the queue.
Thank you. The next question is from the line of Pramod Kumar from Goldman Sachs. Please go ahead.
Yeah, thanks a lot for the opportunity, sir. Sir, you very clearly laid out all the headwinds what you faced in 4Q and what you see in 1H. But at the same time, you're talking optimistically about the margin expansion because the industry per se is not looking at a margin expansion, most of your competitors. So wanted to understand what are the positive tailwinds or positive catalysts what you're looking for the whole of FY18-19. If you can just help us understand, that will be great. That will be my first question.
I think our most importantly is customer satisfaction and the delight, fourth year in succession, number one in IQS and appeal score, and number one in terms of service, definitely. And also all our brands, whether it is Apache, whether it is Jupiter, the recently launched Ntorq and commuter motorcycles. I think there is a lot of positive momentum. We are not participating in tactical promotions of our brands. We are also investing behind the right technologies. Our exports is continuing to grow. In many markets, we have done extremely well, and three-wheelers continue to grow. So overall, in terms of focusing on the product mix, is one strong brand and quality growth. Yeah, quality growth. And the second is related to cost.
Yeah, monsoon is expected to be normal in 18-19, and this upward bias, what we had indicated, is likely to remain like this for the first half. But the measures what the company has taken is, one, we are constantly reviewing the position and already taken a price increase to neutralize to the extent of 0.5%. And we are also focusing on the cost reduction projects like VAVE, platform commonization and localization. And with the strong brand and the improved product mix will help us to mitigate this cost increase.
Okay, and can one expect a reasonably good pullback in the percentage of marketing spend for the company, given that don't see much of ad spend for Apache? I'm told it's sold out for the next 3-4 months. You haven't even ramped up the Apache 300 availability beyond the first 50 dealers. NTORQ is again kind of sold out in most of the markets. So is going to be the year where we see some reasonably good pullback in the marketing percentage spend?
Marketing percentage will definitely come down primarily because the revenues are growing, the overall volumes are growing, so a proportion of the overall marketing spend will come down.
And Kiana, my second question is for the marketing expenditure, on the export side, apologies. There, for the last 3 consecutive months, you are seeing a dramatic improvement in volume, especially in three-wheelers, and also your Apache dispatches have stepped up dramatically from March. And April also looks like, based on the SIAM numbers, is a meaningful improvement. Is it something which is sustainable? Because I understand both these product categories will be higher margin and given where the currency is. So is this something which is a more of a one-off which you've seen only for the last 2-3 months, or you think this momentum can be maintained going into FY19, the whole of FY19?
Export is a good story, Pramod, and I think we have very good order inflow. I think all the markets wherever we are selling our brands, the pull is extremely good. So this momentum will continue. And overall, India also we will continue to grow ahead of the industry. That confidence is there, and these brands are doing well.
So you expect the momentum to continue in FY19, both on Apache and the export count especially?
Yes.
And final question on the TVS credit side. I do understand you consolidated the result for the first time, which has meaningfully reduced the gap between consolidated financials and the standalone financials. If you can talk a bit more about that as to how that business is doing, because this is the first year where we are getting the consolidated or the performance of the TVS credit. So if you can just take some time and explain that business and your thoughts on the growth there and how much value add can it do for the TVS standalone entity, and also quick comments on the TVS Indonesia operations as to how is the loss trajectory there.
Just to give a background, TVS Credit Service became a subsidiary on 7th September 2017, and what is included in this consolidated statement is profit relatable to that period from 7th September to 31st March 2018. On a full year basis, their PBT for this year is 170 crores and the PAT is 114 crores as against last year's PBT of 79 and PAT of 51 crores. Then I'm stand corrected. Last year 16-17 PBT was 135 crores and it has gone up to 170 crores, and last year PAT was 87 crores, has gone up to 114 crores. And the net worth is 892 crores, and their book size is 6,100 crores, as against last year's 5,000 crores. This is about TVS Credit Service. The full year impact of this in the consolidated accounts can be seen in the next financial year.
With respect to PTTVS, I think our exports numbers, the overall volumes are going up. There also we had some headwind with respect to the material cost increases, but this year we are very confident that we will break even and we will make a small profit in PTTVS.
What was the PBT loss number or the EBITDA loss number, if you can share? PBT would be pretty helpful.
which one you're asking?
Indonesia, sir.
PT TVS, okay.
Yes, 3.7 million.
And last year, sir?
The same level.
Same level. Similar level.
Okay. Thanks a lot. I'll come back in the queue. Thanks a lot.
Thank you. Participants are requested to limit their questions to 2 per participant. Time permitting, you may come back in the queue for a follow-up. The next question is from the line of Ashish Nigam from Axis Capital. Please go ahead.
Yeah, I wanted your thoughts on mopeds. So, going ahead, there's a requirement of CBS, then fuel injection. Also, the instrument cluster has to change to, incorporate OBD. So, firstly, are these technical challenges for a moped?
I think BS6 is a challenge for all products. But what is good about moped is we had 2-stroke, we completely converted it into 4-stroke, and moped is doing well. There is a healthy sales of moped, and there is a category which is completely focused on the entry-level customers, utility set of customers. So we are also working on all these new technologies required for BS6, and we will comply with BS6. Definitely we will comply with it. There will be challenges. Like all the other models, there will be challenges in terms of the cost. But when BS6 happens, the relative cost of every model, whether it is moped, whether it is motorcycle, scooter, everything will increase. So we have to look at only the relative pricing and the relative positioning in the market. But as a category, customers love it, especially those people who carry load in the utility space at the entry level.
No, so because there's a view that, the moped is anyways, technologically a little lower than, let's say, a motorcycle is to begin with. So, in percentage terms and maybe in absolute terms, the jump is quite high going into the safety and the emission norms. Is that something you all are seeing?
No, technologically, I don't know how it is inferior. I don't understand. Because you drive a moped, you look at the current 4-stroke, you look at the engine, it is similar to a motorcycle. There's absolutely nothing inferior about the technology.
Okay. So the outlook on moped is that, that's a segment we find it tough to, really, understand the psyche of that buyer, because, there's always a view that this moped buyer is about to upgrade to an entry-level motorcycle, and there's many entry-level motorcycles who are actually, vying for that market. How are you all seeing that?
There are today motorcycles available very close to moped price or lesser than moped price, but still we are selling moped.
Yeah, so, how are you all thinking about that segment? Is that, going ahead in the next 5 years or so, is it something that will underperform the rest of the two-wheeler pack?
I don't want to say that. We are focusing on the customer. We are focusing on the customer, and we are very proud that we have a range which satisfies starting from the entry-level customer up to a premium-level customer, now on a super premium model customer. So we will continue to invest and support those set of customers, and I don't think it is going to decline.
Okay. So, the reason I'm asking is because, obviously, coming to your margin, there are many conspiracy theories of which segment is more profitable for you. There's a view that, mopeds is relatively more profitable for you because it's, it's a monopoly there, so there's low advertisement cost. Something you can talk about the margin, between different segments. From a mix point of view, what's taking you from 7 to 10?
We don't generally give guidance on margins segment-wise, but overall, we are present in all segments, and we will continue to invest behind the product development, technology, brands, and overall the sales revenue will grow.
Okay. Okay, that's helpful. So, even in three-wheeler space, there are some peers of yours who are talking about very strong volumes in India because of, new permits in some states and scrapping of permits in Maharashtra. What traction are you seeing there, and what's the outlook for FY19, volume outlook?
I think the industry will grow. We are expecting the industry will grow overall, both in exports as well as domestic. Of course, in domestic market, it is, like you said, it is permit driven. So, but in international, definitely people love the role played by three-wheelers. So we are confident that this year also there will be growth, and we will continue to grow ahead of the industry in three-wheelers in international as well.
Okay, last question if I can. Just so you can share the BMW JV, the volumes.
Last year, we did about financial year 26,471 last year we did.
Okay. And any, financial numbers you can share?
26, the overall sales number, this is the number what we share.
Okay, thanks and all the best.
Thank you.
Thank you. Participants are requested to limit their questions to 2 per participant. Time permitting, you may come back in the queue for a follow-up. The next question is from Amyn Pirani from Deutsche Bank. Please go ahead.
Yes. Hi, sir. Thanks for the opportunity. I just wanted a clarification, in case I missed this. So you mentioned that the price hikes taken in January were actually helped to, to help the dealer profitability. So basically, is the understanding correct that the price hike to the customer did not flow in terms of high realization for you, but was retained by the dealer? Is that a correct understanding?
Yeah, correct. You are right. Absolutely right.
Okay. And then just one more question. You mentioned that, margin pressures on account of raw material, and other factors. Just for this quarter, the increase in other expenses on a YY basis is very high. So is it entirely attributable to the Auto Expo and launch expenses, or is there something else that is also there?
No, we indicated the minimum wages impact is also included here.
Okay. No. You are asking marketing?
I'm asking, the other expenses, yes.
Marketing, yes, your understanding is right. I think there were 3 product launches because Apache 310 RR came in the last week of December, then Apache 160 4-valve, NTORQ 125, all this happened in between January, February, March. And February we had the Auto Expo. So all put together there was almost 0.5% increase in the marketing expense.
So this is like a one-off which would not come back again in the next quarter, right? Is that the correct understanding?
Yeah, normally all bunched up are unlikely.
Okay. Understood. That's helpful, sir. I'll come back in the queue for more questions.
Thank you. The next question is from the line of Vasudev Banerjee from Ambit Capital. Please go ahead.
Yeah, thanks for taking the question. Couple of questions. Just continuing with the previous question, as you rightly highlighted, new launches and auto expos, because of that 50 basis points enhancement. So should we look at from a percentage perspective or from an absolute number perspective, that is down the line with volume growth being much superior, a few of those other expense line items not moving in sync with the volume, and that's how the margin benefit should trickle down. But if we continue to see it from a percentage of revenue basis, then despite your volume moving up at such a good pace, we will only continue to see from a 50 bips increase here and there basis, and that won't be anything positive from a EBITDA margin perspective. So if you can highlight on that angle, sir.
I think there are 2 important points. First, we have to look at the industry. There has been huge, what you call tactical action in terms of last quarter, if you look at it, especially in the entry-level segment. Okay, there were price reductions, there were offers. As against that, we have not participated in a significant way. But that has also resulted in not increasing the prices in a significant way. Okay, this is one. So we have to look at, one, we have to grow our revenue, because that is what is most critical for the business. Number 2, we have to invest behind the right brand. So when we come up with 3 launches together in a quarter, which we also wanted to space it out, we have to invest behind those brands. This is very, very important. And in any such cost, there is something which is fixed, another one is variable. And the fixed cost percentage will definitely come down. What you said is absolutely right when the volume goes up. And that is exactly our focus. The product mix being better, the volume growing up, the fixed cost will definitely come down. On top of it, there will be very closely watching opportunities for increasing the prices in the market. And already we have done almost 0.5% in between April and May this year. So we will be reviewing very closely actions related to that. And the other variable costs include the freight increase, factory conversion costs, etc., where there are many initiatives to control that.
Okay, sir. A couple of more questions. One, hello? Hello? Yeah. So, the January price increase, which eventually got passed on to for dealer margin and not benefiting you amid a cost inflationary scenario, is that a perennial thing, or it can get reversed down the line because those incentives are typically temporary in nature?
No, this margin increase is part of the support required to do many, that because dealers are also having challenges with respect to cost, also working capital. So this is an initiative, whatever we have taken, but definitely this will also help us to improve our retail going forward.
So basically, another person also had the same concern because your volume growth is one of the best in the industry compared to the leaders. So if your dealers get concerned about growth and cost inflation, then what should be the scenario for the leaders?
No, it's not a concern for which this money was given. Because of GST and other introductions happened, the working capital related challenges were faced by them. So to ease that and to normalize the situation, this was given. It's not that a concern for which this was given or only to improve the sales. That's not the reason for giving this increase.
And also this dealer margin review takes place once in 3 years, once in 4 years, like that we review. So this is also part of the process of the company.
And sir, it had the impact on margin by 40 basis points, am I right?
Yeah.
So, okay, sir. And last question is, if I see your brand-wise volume, largely Jupiter volume was 63,000 in July last year, and it is still 65,000. So a matter of a couple of months more when base effect will catch up. And if I see since November, your volume has gone nowhere. So even to expect an industry level growth, your volume, absolute volume of Jupiter should be 75,000 sooner than later. So any view on that?
Jupiter is a good brand and it will continue to grow. Definitely it will continue to grow. Our focus is with Jupiter, Scooty Peplus, Zest, and Vigo. We want as a portfolio to grow and grow ahead of the industry. That is our focus. And now we have Ntorq, which is completely positioned for attracting new customer segments. So all put together, we will grow faster than the industry.
Sure, sir. That's all for myself.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal. Please go ahead. Jinesh Gandhi from Motilal Oswal, your line is unmuted. Please go ahead.
Hello. Can you?
You are audible now.
Yeah. Hi, sir. My question pertains to the price increase which you took from April of 0.5%. Is that sufficient to cover the cost inflation which we are seeing so far, or we would have to take further price increase?
It is, the price increase is something which we will review regularly. This is the first of price increases what we have taken. But if you compare it the cost increases, we'll have to look at it, further review on price increases, which we will regularly do. So we will continue to review on the situation, and then we will decide on the further price increases.
Okay. Secondly, with respect to our capacity, so considering that we have been growing quite substantially and we haven't invested materially in new capacity, can you indicate what kind of capacity we have currently, and is there any plan to either expand through brownfield or greenfield route?
We have about close to 4.8 million capacity.
Okay. And this would be fungible between scooters and motorcycles?
Yeah. It is there between all the models, and that will be sufficient definitely for the next 1 year.
Okay. And what would be our capex plans for FY19?
We will be investing about 700 crores.
Okay, and this includes investment in subsidiaries, or that would be...
This is for TVS Motor Company, because we have all new products plus some supplementation of capacity, some supplementation of technology projects, and also BS6 there is an investment. All the products should get ready by 2020, so it's a combination of all put together.
Understood. And with respect to our current quarter interest and depreciation, we have seen an increase on QQ and YY basis. Is there any one-off there, or this is more sustainable number?
There's no one-off item here. One is depreciation increase because of the full year impact of what has been capitalized during the year, and also some of the Q4 capitalizations. And also the tools amortization is one of the reasons, because of the Ind AS implications. So that's the reason why depreciation has gone up. And interest rate-wise it has not gone up, but some working capital related borrowings have gone up.
Okay. And lastly, in terms of tax rate, do we expect tax rate to remain at FY18 level of about 25%, or that should be...
No, it is likely to go up, because this year the increase when compared to the previous year is mainly because of two reasons. One, the tax holiday enjoyed for the HP plant is over. Second is the R&D deduction, which was at 200%, has been reduced to 150%. That's the reason why it has gone up during this year. And also there was a deferred tax related liability that was returned back this year. And that's the reason why it is at 24, and this year it is likely to go up. It's likely to go up to between 28 to 29%. Because all other benefits are slowly being withdrawn now. Therefore, it will be around 28 to 29%.
Understood, sir. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Sonal Gupta from UBS Securities. Please go ahead.
Hi, good afternoon, sir. Thanks for taking my question. Could you, you mentioned in the cost impact or the raw material cost that there's increased import duty on, customs duty on imported parts. So what portion of your raw material cost would be imported component?
About 15%. 15%.
And so this would be mainly, like things like alloy wheels, or is there something?
No, various parts from various countries. So all put together about 15%.
Okay. And could you share the export revenues for the quarter and the full year?
Export revenue.
950 crores for the quarter, and year as a whole it's around 3,100 crores.
Okay, sir. And just lastly, could you shed some light on what sort of impact do we see on the cost side with the ABS coming in from April next year?
That is a little too early, but these are part of any country which is growing up, and we are also investing behind safety. I think we are also making our emissions in line with whatever is happening in Europe, which is very good for the country. So there will be cost increases, but it will be across all models. You will see BS6 increase in cost. So the company is working on various technologies to optimize the cost.
Okay, sir. Okay, thank you.
Thank you. The next question is from the line of Pramod Pandey from Reliance. Please go ahead. Pramod Pandey?
Yeah, hi sir. So just wanted to check, now that we are this year, whatever we had guided on margins in Q4, and now given the outlook for first half, can we assume that, the trajectory for the double-digit margins has moved forward by almost a year or so?
I don't want to put any comment on the duration, but we will continue to focus on improved EBITDA margin, and definitely the product mix improvement, the volume improvement, and our cost reduction initiatives, and also the growth in various brands will definitely help us to move in the right direction.
Okay, sir. Thank you very much.
Thank you. The next question is from the line of Pulkit Singhal from Motilal Oswal Asset Management. Please go ahead.
Yeah, hi. Thanks for taking my question. So you mentioned about competition intensity going up. Can you talk about the various segments in which this is happening? Mopeds, there's no one. So scooters, motorcycles, and three-wheelers. Is it across the three segments? And what is the nature of it? Is it more like price cuts? Is this something that you've seen before in the industry, or it's happening for the first time?
I think more details, all of you must be knowing it. I think the intensity is maximum in the entry level and in the commuter side. So each competitor and each company has got a strategy. So we are very clear that we don't want to get into tactical actions, but we will invest behind the brand, come up with investments related to refreshers, upgrades, and new products. That is going to be our strategy.
Okay, and scooter side, have you seen that as well?
Scooter side we have seen, but that is again left to the individual competitors. So, but scooters again, we are seeing a good momentum in terms of the industry growing, overall industry segment proportion going up in scooters.
That's what, sir, given that, you have the history of operating in the space, is this something which is relatively new even for you when you look back over the past decade, the kind of nature of competition, or is this something which you think is regular, comes and goes?
I think this is regular. Only thing is it is intensified a little bit because when raw material costs go up, when you have tacticals continue, then there is a pressure. But this we have seen even in the past.
Okay. And so in terms of the dealer margin expansion, at least I haven't heard of any other players saying the same thing. So in the last at least 2-3 years as well, neither this quarter. So what is really the reason for that? Is it, are we trying to push our products, or what is the necessity for raising the dealer margins? What happened in GST, really?
No.
The other companies are not saying that.
This is part of the process of the company. We review it once in 3 years, and then we take the decision related to the market.
Okay. Thank you, sir.
Thank you. The next question is from the line of Deepika Mundra from JP Morgan. Please go ahead.
Hi, sir. Thank you for taking my question. Sir, regarding the R310, what would be the volume target for next year?
Which one?
So the R310, Apache 310.
Apache 310, currently we have started supplying around 1,000 per month. We will review it regularly. The acceptance in the market is extremely good. We will depending upon the plan of expansion, we have capacity to increase the volume. So this will be reviewed regularly.
Okay. And sir, regarding the scooter market, do you see the 125cc space growing meaningfully next year, or both in terms of volume and in terms of profitability? Are you seeing a lot of competition again coming in that space impacting margins?
See, the scooter category share now is almost 33%, and it is very, very clear that when you have a segment which is growing like that, you will have the wide range starting from exactly like what we are seeing in the motorcycles. You will see an entry level, you will see an executive level, you will see a 125cc which is uniquely positioned for youth. So I think this is part of development of any segment and market.
Okay, sir. Thank you.
Thank you. The next question is from the line of Chirag Shah from Edelweiss. Please go ahead.
Thanks for the opportunity. Sir, I had one question on pecking order of your products. So within the various segments, if you can indicate qualitatively which is the top in terms of pecking order, in terms of profitability metrics, and which would be on the lower end of the profitability metrics in terms of segments of products. How should we look at it?
We look at from the customer point of view. Okay, each brand is positioned for certain set of customers. We don't take it from the profitability point of view. We look at, for example, Apache, Premium, Super Premium. This focus on the youth of India. Not only youth of India, we look at those customers globally who are passionate about racing. Okay, because RTR stands for that. And if you look at NTOR, it is for, again, young customers who are focusing on special experience with respect to scooters. Okay, if you look at Jupiter, it is a product for most of the commuter customers. So each brand we are positioning based on the customer understanding and the nature of how they use it.
So profitability-wise, there may not necessarily be a major difference in terms of margins. Absolute profit, there would be difference, but between a moped, a scooter, or a motorcycle, and within each various sub-brands that you have, the profitability metrics may be very different, may not be very different, you may not be giving much importance. Is this the way we should understand your business, and that your focus is more on absolute EBITDA growth and value per EBITDA per vehicle growth rather than absolute margin as a focus area?
Absolutely. We wanted to look at overall company doing better and better in EBITDA margin. And we would like to leverage all the brands. We would like to leverage our international business. We would like to leverage our three-wheeler business. Overall, we wanted to grow revenue. We want to reduce our fixed costs. We want to focus on our cost reduction, invest behind our brand, so that we go towards increased and improved EBITDA margin.
The second question is on the marketing and branding side. How different is the intensity and the nature of branding in the export markets and the domestic market?
I think the international markets, I think it's evolving. Each market is different. Okay, some markets are, in that comparison, India is much evolved market. Some markets are advanced, some markets are evolving, some markets are at the basic level. So, I think, yeah. So, I think our approach is first look at products and understand the customer usage and make the products and the brands and try to build those brands in those markets. Okay, first focus on supporting them with sales, service, spare parts availability, network. Okay, but each market will evolve over a period of next 5 years. Definitely it will evolve.
But would it be right as a percentage of revenues, the spend in domestic would be higher than the spend in export? So if you have 3,100 crores of export revenue, as a percentage of that revenue, the spend that you do on various activities would be lower in export markets with the domestic market. Would that be a right statement?
I think here again we have to look at some are nascent markets, some are developing markets, some are slowly becoming developed markets. I think we have to look at how the brand is getting built, how the overall revenue stream is becoming better and better, how we are growing ahead of the industry there. That is the way we have to look at it.
Fair point, sir. This was really helpful. Thank you. And all the best, sir.
Thank you. The next question is from the line of Raghunandan from Emkay Global. Please go ahead.
Can this be the last question, please?
Yeah, thank you, sir, for the opportunity. So just wanted to understand the recent USD depreciation. How do you expect that to help?
So what was the question? Sorry, come back.
The recent, rupee depreciation against USD, how do you see that helping on the realization side?
No, it's very too early to talk about it. There are...
and so on TVS credit, what would be the stake TVS would have in TVS Motor Services, and TVS Motor Services does in turn hold 100% in TVS credit? How does the shareholding stand as?
The TVS Motor Company holds 100% of TVS MS, and in TVS CS it has got 84.9%.
Got it, sir. And so for TVS Ntorq, the product has been doing about 15 to 20,000 kind of monthly volumes. Do you think that is sustainable for the year?
I think so far the feedback has been extremely positive. I think we will definitely review it regularly. Okay, we have opportunity. Wherever we have opportunity, we have always invested in capacity. So, being a new product in the new segment, we are happy, I think, the way Ntorq is getting built in the market.
Understood, sir. And so, the capacity of 4.8 million units, what would be three-wheeler capacity?
The three-wheeler, we can, that is separate. That is about close to 180,000 per year.
Got it, sir. Thank you, sir. Thank you very much.
Thank you. Due to time constraints, that was the last question. I now hand the conference over to Mr. Annamalai Jayaraj for closing comments.
I think one or two more questions we can take. I believe many people are there, so maybe another 5 minutes we can extend.
So we'll take the next question then from the line of Arya Sen from Jefferies. Please go ahead.
Okay.
Yeah, hi. Good afternoon, sir. Firstly, if you could talk about the dealership network expansion this year and what are the plans for next year?
I think this we review regularly. I think dealership expansion is again based on the customer needs and based on the expansion of the cities and the semi-urban areas and the rural areas. So we constantly review that and keep expanding in line with whatever required.
So if you could share a number, how much was it at the end of this year and versus last year, and if there's a number target for next year?
These are all, see, there is no target here. We review it regularly. Okay. As of now, we have about 1,150 dealers and about 3,000 sub-dealers. So this is as of now.
And what was that number last year, sir, same time?
It was less by 250 numbers.
Yeah.
250, right? Hello?
Yeah, you're right.
Yeah, and secondly on, I just wanted to get your thinking on, launching Ntorq versus maybe a 125cc version of Jupiter. Is that something you would think about, and how did you look at it? Because, different players are adopting, either strategy. So what was your thinking behind launching Ntorq instead of launching 125cc of Jupiter, and if that is something that could be done going forward, what are the merits and pros and cons?
I think every company has got a strategy. Ntorq is a unique brand. I think it has got unique features and it is positioned against certain set of customers. Okay, and we are confident that Ntorq as a brand will do well and it will grow.
Right. And lastly, sir, if you could share marketing expense, sales and marketing expense this full year versus last year, what is the percentage of revenue or, whatever way you can share it?
So generally, we don't share this. Only the one-off related expenses are given. It is included with other expenses.
Okay, sure, sir. Thank you. That's all from my side. Thank you so much.
Thank you. The next
we'll take one more person.
Sure, sir. So we'll take the last question from Jay Kale from Elara Capital. Please go ahead.
Yeah, thanks for taking my question, sir. Again, coming back to the dealer margin bit, just wanted to understand that this pass-on of this dealer margin, is it different for different products in the sense, say for an Apache, you might not have passed on, the increase in dealer margins, but say where the competition has heightened into scooters or say in the entry-level motorcycles, there your incentive given to the dealers will be much higher and hence a blended basis of 0.5%, or is it uniform across all products?
No, this is across.
So this is across all products?
All products.
And in terms of your NTORQ customer profile, if I have to just understand, how is the initial response in terms of the customer profile? Is it, upgrading from, say, 110cc Jupiter or, Activa, or is it the earlier Activa 125 customers, migrating in terms of replacement to NTORQ? So how is the customer profile of NTORQ?
Too early, because we started supplies sometime in March, April, so 2 months, and it has just filled the channel and it has started retailing. So too early to comment on the profile of the customers of NTORQ.
Okay, so just one last question. Just on the moped side, we understand from your earlier interactions that moped is largely a rural kind of a product. We've seen that in FY17 when there were headwinds of demonetization in the rural bit, we saw a strong 24% growth, while when the rural bit revived in FY18, we saw a decline in mopeds. So was it more to do with the specific markets not performing well, and how should one look forward even if rural does well in FY19, how should one expect the growth of moped in the next 1.5 years?
I think you put all the points very rightly. I think the demonetization definitely affected much more the rural, and post that we had the GST and the consequent changes. On top of it, I highlighted that in the entry level from competition there were significant price cuts. So as you know, rural India, it affects. But I am hoping that this year the monsoons are likely to be normal. And very recently we have also put an electric start moped in some markets in north. So I think there is a good possibility, while it may not grow significantly, but as a category the customers like the moped, and it will at least retain the category share.
Okay, sure. Thanks a lot.
Before we close, I just wanted to highlight that 2018-19, 17-18 was a good year for us. 18-19 will be definitely a good year. Overall, we have very good portfolio in terms of the products, and our domestic will continue to grow ahead of the industry. Also, international will continue to grow ahead of the industry, and three-wheelers will continue to grow ahead of the industry. The monsoon is likely to be normal, and the initiatives on cost reduction and the strong portfolio will definitely will substantially mitigate the cost increases and definitely help us to improve our EBITDA performance in 2018-19. Thank you.
Thank you. Mr. Annamalai Jayaraj, any comments from your end?
Yeah. On behalf of B&K Securities, we thank Mr. K. N. Radhakrishnan and Mr. Gopal Desim for taking time out to discuss the results. We also thank TVS Motor Management for providing us the opportunity to host the call. Thanks all for joining the call.